we are going to get into this training. I am so happy to be helping you with this really important life stage where we tap into passive income, creating better futures for ourselves, and just setting ourselves up for success. Please excuse my voice. I don't know what happened. I think it's allergies. I feel great. I just have I'm losing my voice. So here we are. Hey, Deanne from Chicago. What's up? What's up? Okay, let me share my screen with you so we can get into this. We are going to get into this training. I'm going to teach you how to step into your rich girl era and say goodbye to the days where you trade time for every dollar you earn. During this training, I'm going to show you how to make the shift from lost, confused, overwhelmed with investing to understanding exactly what you need to do to invest confidently in a way that generates passive income to enhance the quality of your life. I'm not giving you any weird strategies or tactics today. I'm giving you real principles and simple tactics that can be used to grow your wealth. I'm gonna turn off my little cursor because it's kind of flying everywhere. If you stay till the end, I'm giving you a free guide. It's choosing investments for your portfolio. This guide complements this training. So we can't get into everything in an hour-long session. Of course, investing is just too complicated, too complex. There's a lot of stuff. But when you get this guide, you can use what's in the guide to go back into the training and fill in the gaps. So we don't have to cover everything today, but my promise is to give you as much value as I can in the next 60 minutes. I know your time is valuable. And with that being said, I want you to show up. You've already showed up, so turn off your distractions, try to tune in because we're not making peanut butter and jelly over here. Investing can be a little complex. So I don't want you to get lost. There are some things that build upon itself throughout this training, and we will be covering how to set realistic passive income goals. And I'm sorry if it sounds like I'm yelling. If I talk in a normal voice, then then my voice cuts out. It's I have to use my diaphragm to project louder. So I feel like I'm yelling, but if I don't, my voice is cracking. So here we are. Turn down your speaker if I am coming across as yelling. Let me get this thing out of the way. Here we go. Okay, so we're also going to talk about how passive income works with investing. I'm going to show you how to create your own investing action plan. So how to put this all together in a strategy that works for you. And at the end, I'm going to be sharing an offer with you that I'm very excited about. I don't expect you to take it seriously unless you get a lot of value from this training. So just a heads up, that is coming. I have something exciting to share with you. And I will also, of course, answer any questions about this training, about investing, or about the offer that I have to share with you. And I want you to know that you're in the right place. If you're tired of trading time for every single dollar you want and need, if you want to quit your job someday, right? And have income coming in every single month. I feel like I could have had this be a picture of me because I quit my job 5 years ago and I took a month-long trip. I went to Spain, Italy, Turkey, and Greece to kick off my time as a business owner and my transition into supporting myself from the income that I've been able to accumulate in my portfolio. It was very exciting. And I want that for you. So you are in the right place if you want an additional income stream for goals prior to retirement. This isn't all about retirement. It's how can you live your richest life now? Or you're tired of letting the dream of having passive income go unfulfilled year after year. It is time to take action. So you're in the right place if you want to use this summer, literally this summer, to start building your rich girl life. Now, what does that mean for you? Imagine for a second that you're here. You've got a surplus of income coming in month after month on autopilot. So what is the most exciting part for you? I want to know in the chats, let me know. Is it financial and location freedom? Is it more time to spend however you want? Is it less budget, more bougie? not having to check the menu for the cheapest thing to order, but just like actually ordering what you want, not just what your budget says you can afford. Which one is it, or is it something else? Let me know in the chat. Melissa, less budget, more bougie for sure. I love that. Audra, number one, more time to spend with my daughter, making memories. Yes, yes, yes. It is so nice having the ability to be around for our kids more, right? So for those of you that don't know me or don't know me well yet, my name's Maggie. I've helped hundreds of clients manage millions of dollars working for big brokerage firms. I'm founder of Money with Maggie. I left those big brokerage firms after I realized like you have to have hundreds of thousands of dollars to get any quality attention from professional, traditional financial advisors. So that led me to start Money with Maggie, where I'm simplifying investing and making it easier for more people to start sooner. I am qualified. Not only have I invested my own money and like gotten to a point where I feel really good and financially free, but I do have the credentials to back me up. I'm a certified financial planner. That's the gold standard in the financial planning world. I had my Series 7 and 66, which allow me to offer financial advice and sell investment products as a stockbroker. Those were licenses that I had at those big brokerage firms. 8 years of experience working at Charles Schwab, Morgan Stanley, and E-Trade, helping really high net worth, wealthy individuals manage their money. So the interesting thing that this experience gave me was the inside look behind the curtains, right? What are these wealthy people doing to accumulate their money? And what I saw was they had been investing for a long time. Now, not all of them that used investing to get wealthy, but some of them did. Some of them had very normal jobs, very average incomes, and they just invested consistently over their life. Some of them were business owners, some of them, but they all had this thing of investing in common that they used to amplify what they were doing to get more money. And because I saw that, it really made me want to start investing my own money, because I was like, dang, these people have got some money. They've got their ish together. I want that to be me. So I took that principle of find someone who has what you want, do what they did, and you'll get what they have. So I started investing and was able, well, let me share this with you, because this is just a little bit of my before I started investing. I was living paycheck to paycheck, sharing a 1-bedroom apartment with my daughter and my best friend. This isn't the apartment. This is actually the house that I bought after the apartment. But I didn't take a picture of that, unfortunately. My daughter slept in my room. She was like 9 or 10 years old. She wasn't a little toddler. Like, it was pretty rough, but I did have her when I was 19 years old. So, it took me a while to get going. But the important thing is, like, it's never too late. You can just get started today. I had $15,000 in credit card debt, $35,000 in student loans, negative net worth. Okay. That was my 1999 rodeo in the driveway right there. I drove that for like over 10 years. It broke down time and time and time again. I just kept repairing it because I wanted to save some money and get ahead. So now I have a beautiful home. I have over $600,000 invested, complete financial freedom. I like, even before having the millions of dollars, like, we're going to run some numbers and get into some calculations. You don't have to have $1 or $2 or $3 million. You might need to, depending on your spending, but maybe not. It doesn't have to be what traditionally you hear on the news, right? It can be less. It just depends on your situation. But now I feel like I am living the rich girl summer life every single year, and it is quite amazing. And I'm going to show you how to do the same. Investing has allowed me to start my own business, travel the world, take care of my family, and be around for them. This is a picture of me with my husband and my 19-year-old daughter and our 2 little kids. So freaking cute. And I'm telling you, it's much easier this round with the 2 littles having some money than like the complete struggle bus I was on with my daughter raising her. But we're all benefiting from it now. And this is on the right, this is a picture of my mom being embraced by her 3 sisters who she hadn't seen for 30 years. She moved from India in her 20s, and it was always a goal of mine to take her back to see her family. She had a huge family in India. And when she got to America, things were rough. It's harder to get on your feet than it seems. And especially if you have a kid, especially if you marry an alcoholic like she did. My dad was in and out of jail my entire life. It was chaos. It was chaos, but we're doing so much better now. And I want you to know that whatever the reasons are that you have to create a passive income stream, I'm here to help you turn those dreams into reality. Let me know if this sounds like you, because I can't believe the prices of stuff right now. I'm just like, wow. Anytime I go shopping, I'm like, whoa, this is crazy. But prices are going up quicker than your income, making it more and more challenging to save and invest. You're trading time for money, leaving you unavailable for life's adventures or just downtime to chill. You're tired of feeling like you could be doing more with your money, but you're unsure of what to do, so you do nothing. I hear this one all the time because there's so many options, right? Do you do retirement? Do you do a business? Do you do like XYZ things? Like, do you buy a house? There's so many options. So if you're struggling to make financial progress and truly get ahead, I'm telling you, today's training is going to help you. I believe the real problem is there hasn't been clear guidance for us on how to manage our money. We all know we were not taught this in school. Most of us didn't have parents that taught us this stuff. I know my mom didn't. And we've just overall been left out of the conversation. Financial advice has primarily been geared towards men. I worked in an office with 50 male financial advisors. I was one of 3 female financial advisors. And I'm telling you, those guys were so annoying in talking over my head and explaining things that like didn't even make sense. I'm like, can you hear yourself? Because this doesn't even sound like English. Like, that's how I felt early on when I was learning. When I first got my job, it took me years to like get this stuff to click. So on that note, as we go through this training, you might like stuff might not click right away, but that's okay. Just you're showing up. You might have to hear it again. You might need to watch the replay, but like the fact that you are putting yourself in front of this information and you keep doing that, it'll start to click and it'll all make sense. I will try to make it as simplified as I can. Because 50% of people age 65 or older are receiving half of their income from Social Security, and 1 in 4 people receive 90% or more from Social Security. This is what happens if you don't take action, and time will pass. So I'm encouraging you to stay with me and take action today. So the average Social Security check is only $1,700. The average numbers could be a lot more than you'll get. It all depends on the income that you made during your life. But like, imagine working your whole life, getting to the point where you're relying on Social Security for everything. Like, that's not what we're here for, right? We want to have rich, fulfilled lives, and not all of it comes from money, but money makes it a lot easier. And the good news is, since you're here, you're setting yourself up for a better future. You're here now. So you're trying to take actions. Like, I don't need to preach to the choir, right? Like, you get it. You're here. You're like, okay, like, let me learn. So put to practice what I teach you today and gain confidence that you won't end up working for every dollar forever. That is the goal. Because the best way to predict your future is to create it. If you do nothing, if you don't set any money aside, you're very likely to end up relying on Social Security, if that's even a thing. Or you can create a different reality for yourself. Oh, okay, we're getting right into the training now. it's very, very important to set some realistic income goals for yourself. And without running the numbers, you're just not going to know. So we're going to understand compounding growth. That's what we're about to get into. How much income would you like monthly and by when? I'm going to show you how to figure that out. I can't stress enough the importance of having meaningful goals so that you stick to the process. Like me taking my mom to India was a huge goal. Like I remember telling the hiring managers at Charles Schwab, that is one of my goals. I want to take my mom to India. I'm saving up for that. So that really helped me focus on getting good with money and saving so that I could reach that goal. So find those goals and like really, really like cling to them, because it's easy to just let money slip through the cracks. And that's what happens without that meaningful goal behind it. Getting into the meat and potatoes of this, I should say something else for like women, right? Like, I don't know what the equivalent of meat and potatoes is. I mean, women eat meat and potatoes, but like, you know what I mean? It's more of a like guy reference because that's a traditional guy meal, I guess. Anyways, but I do love steak. I will tell you, I love steak. My husband cooks it so good. This is a really important aspect because when you first start investing, the majority of your account's growth is going to come from your own deposits. I don't know how many times I've heard someone say like, okay, I started with $1,000. I'm just going to see what happens. Let me know in the chat if this is you. If you've kind of like gotten started in a sense, like maybe you bought a few things, but you just wanted to like see what happens. I've heard that a lot. And so the important thing is to remember you have to get started with investing consistently. And I have got a chart to show you what I'm talking about. So when you put money in, it takes a little while for it to start accumulating to the point where there's enough traction for compounding growth to kick in. So in this chart, take note of the green in the bar chart. The green is your deposits. This is an example of depositing $200 every 2 weeks over a 20-year time frame. So you can see on the left, the green is the majority, the green to yellow. Yellow is the growth of your investments. The green is how much money you're putting in. So this part might feel this might be a little bit of a bummer because you want to know, or you want to feel like investing is going to just like take off, but you have to be consistent, disciplined, and you have to stick with it. You have to keep putting money in, and then you're going to reach a point, and it depends on how much you put in, right? This can happen sooner or later, but you've got to get some money in there for that compounding growth to really take off and work its magic. But over a 20-year time frame, if you look at the circle chart now, the green is how much you've put in over 20 years. You've put in $100,000. The yellow is the growth of the portfolio. So $233,000 has come from investment growth. So if you were to just save, you would only have $100,000 over a 20-year period. But if you invest, this can be 3 times that. You could have $300,000 thanks to the power of investing. Now in this chart, or through this training, I use 10% as a return. That is, let me show my cursor now. Okay, I use 10% as a return because that is, historically speaking, what the stock market has returned on average for the last 100 years. So I still believe in using that as an average just because we're all consumers. We buy products every single day. What's it called? Where populations are growing and expanding, more and more people are buying more and more products. So to me, it just makes sense to use that, if not more. But like, if you feel like that's unrealistic, you can use less in your projections, right? You can use 8% or 7%. Or if you invest more conservatively, you would use a lower amount. I've got Leah on this call helping me out. Leah, if you could drop actually, no, I said this before. I keep getting confused. The order of the calculators is important because I want you to follow along, but this is just a visual. But I will share this calculator with you in a little bit. Never mind. Leah's probably like, Maggie, you already told me this. Like, don't. Okay. So the next thing with this is like, this is that same chart, but 10 years advanced. So going from, let's back it up, going from 20 years, right? It took 20 years to accumulate 300,000. Give it 10 more years. That 300 grand turns to $1 million. That's by depositing $200 every 2 weeks for 30 years. So if you look at the chart, the circle chart, 156,000 is the amount of money that you've put in. So if you only save, that's what you'll get. Investing accounted for $850,000 of this $1 million. This is the powerful power of investing and why I'm so passionate about helping people get started with it. The longer you take to start, the longer it takes for this to kick in for you. Now, I know not everyone on this call is going to have 30 years to be investing. You might be getting closer to retirement. So that is okay. Investing can still be powerful for you, just maybe not 30 years powerful, right? But also keep in mind that we're living longer and longer. Science is getting more and more advanced. So if you're in your 60s and you live to 90, yeah, that's 30 years. So you might not be, you're not going to wait those 30 years to start pulling money. You can invest and pull money out at the same time. So let's keep on going into this, but we've got to know your numbers, right? And feel free to drop in the chat as I'm going. I'm not going to look at the chat right now just so I can stay on track for this, but I will go back to it. So feel free to drop any questions, especially now as we get into running the numbers, because I want to make sure like you feel good with what I'm showing you today. So this brings us to our first calculator, which I'll have Leah drop for you. I don't want you to run into the calculator right now, but you can, or you could revisit the calculator after the training, but stay with me because I'm going to explain to you what it is that we're looking at. So with this first calculator, this is the investment income calculator. Now, going back to this is reminding us that we're using these to figure out, like to give us a frame of reference of how much money we need to invest to get the income that we want or need. So just starting out as like, okay, what if I have $10,000 right now? Like, what would that generate for me? So in the calculator, there's 3 line items. You have to enter 2 of the 3 and it'll populate the other one for you. So in this one, I used a 10% return, $10,000. If you had that, you would earn about $83 per month from your investment. So you might say like, okay, well, that's great. That's not going to really do much for me. What if I want $1,000 per month? So then you go and you enter the income line, like how much income you want. So say you want $1,000 per month. If you get a 10% rate of return, you would need $120,000 to generate that $1,000 per month. So, okay, that gives you an idea like, all right, I need 120 grand to get $1,000 per month. So if you wanted $500, you would probably need about half of that, 60,000. So that just gets you like started with okay, that's what it takes to get that. If you want a large income, like say you want $5,000 per month, you would need a portfolio of about $600,000 to generate that $5,000 per month. So after you kind of have this idea of how much you need to get the income that you want, then you use this second calculator. It's the savings goal calculator. It's like, okay, so now we know how much we have to get the income that we want. How long does it take to get that base level? So let's say you had a really, really aggressive goal. You wanted to do this in 5 years. You're like, in 5 years from now, I want $1,000 a month of passive income. Well, you would have to start saving $1,500 every month to get that $120,000 in 5 years from now. Depending on your income and your budget, this might be completely bananas. Like $1,500 a month could seem impossible. So that's where you say, okay, that's a little too steep for me. What if I want to do it in 10 years? Well, then it would take $572. That still could be steep. So you just have to tinker with these numbers to get it realistic. Like, and then you're like, well, maybe I can't get $1,000. Maybe I could get $500. Like, what do I have to save to get $500? So the important part is running the numbers and also not getting defeated by the outputs, because remember, it is planting the seed of what does it take so that you can then start to rearrange other parts of your life to make this a reality. Because if you don't have the goal, you don't have the action, you can't create action steps to reach the goal. So now getting into the power of investing, we can see that if you contribute $572 per month, you would, over 10 years, you would earn you would get to that 120 grand, right? That we're talking about. You would earn $50,000 from your investments, and $68,000 would be from what you contribute. So you would put in $68,000 over the course of 10 years. You would likely earn $50,000. So that's the power of investing. You could just save, right? You'd guess it would be still great, right? Better than nothing. But you have to also remember that inflation is eroding our purchasing power. So $68,000 isn't going to be worth $68,000. But when we use investing, at least we're outpacing inflation and growing our money instead of just keeping it in the bank. So with investing, you're not going to get that 10% rate of return every single year consistently. There's going to be a lot of ups and downs. Markets fluctuate, okay? So you see this like rocky road, but remember that rich girls are patient. You're in it for the long haul. You don't have to be impatient with this. It's okay to ride the ups and downs, just knowing that like, okay, some years the account's up 30%. Some years it's down 30%. But on average, you give it time, it's consistently been over like a 10% rate of return. So you keep that in mind and remember that like with short-term investing, flexibility is key because of those market movements that we just looked at. If you need something specific for sure, then you don't want to invest that money. Like if you need something in 2 years for sure, don't invest it, because what if 2 years from now, that's a down year in the market? So when we bought this house, we used our investment portfolio purely for the down payment, for renovations, and for the hot tub we have outside. All of it came from our investment portfolio, but the portfolio had been on an upswing. It was a great time to take some money out. Had the portfolio been down, we maybe would have kept renting for another year or 2 years, maybe, depending on what was going on. But since the market did phenomenal during that time, it was a great time for us to trim some of what we had been investing over the 6 years before that. Now we're going to get into the next part of the training, which is how passive income works with investing. So with it, like you use money to buy investments that pay you through growth and income. And actually, before we get into this next step, I'm going to take a quick pause and look at the chat and see if there's any questions. Feel free to drop any questions that you have on that last chart. So Deanna says, oh, hey, I think it's Dina. Hey, what's up? I saw your last name. I'm like, oh, wait, I know you. $1,500 per month, but are you expecting a 10% rate of return? That is the calculation that I was using. So yes, it could be too high for you. If you're not investing in the stock market exclusively, like you've got bonds or more conservative investments, then you would want to drop that down. Maybe you use 7% as your rate of return. So that would be a lower number. Keep that in mind too. With the stock market, I'm just using historical numbers, but that's if you were investing fully in the stock market. What's the difference between trading and investing in those 5 years? By trading, what do you mean by trading? Like, how I understand trading is like you buy and sell investments. That's typically trading. Investing is more like buy and hold. Is that what you mean, Ali? Let me know. Trading, I do not advocate, or I don't go the trading route, because historically speaking, stock traders like have a very, very low success rate. I think it's about 4% of active traders outperform the index, like a buy and hold strategy. So that's what trading is. Trading is where you're like, okay, I'm going to buy Apple today and I'm going to sell it tonight or tomorrow, and I'm going to profit the difference. Like if I buy it, it goes up, I sell it tomorrow and I keep the difference. The problem with that is then you have to figure out, you always have to be figuring out what to buy. That's better than what you sold. Like if you buy Apple and it goes up and you sell it, well, you have to buy something that is going to go up. And what if Apple just would have gone up? So it gets into this like really weird mind game of like constantly having to find something that's doing better than the thing that you already have. And it gets you into this hamster wheel. And often like the numbers just don't support active trading. So what I'm talking about with investing is buying and holding your investments and then selling some of them to, and not even like a whole stock, you can sell a portion of a stock to fund your passive income lifestyle. And I'll tell you more of that in this training too. So how passive income works with investing: you buy the investment. Well, there's a couple of different ways, right? But it starts with you purchasing investments that pay you through growth and income. The only work that you have to do is to buy the investments, to create the strategy, and your money does the rest. It's the easiest way to create a passive income stream. Like being a business owner, having had a rental property, like both of those things are significantly harder than investing. Investing, while it may seem complex, it just is a matter of creating the strategy and putting your money in consistently. So it does become relatively easy over time. Now, there's two types of ways that you could get your income: dividend income or investment growth income. So what is a dividend? It's payment from a company as a thank you, in a sense, for owning their stock or fund. So some companies will, like every quarter, they give you money for owning their stock. You don't have to sell it. Sorry, I'm just seeing if I left anything off. Like you buy an investment that pays the dividend, right? You don't need to sell. It just automatically gets paid to you, and it's usually paid quarterly. With investment growth, you buy an investment that's growth focused. So growth companies, they, instead of taking their profits and paying it to you and me, they reinvest back into their company for more growth. Dividend companies, they take their profits and pay them to you and I for holding their investment, because they maybe have reached a point where they're no longer growing as much, like Coca-Cola, maybe, for example, or I just can't think of them off the top of my head, but There's certain companies that just aren't focused on growth as much because they've grown so massively. And now they're just taking their profits and giving them to us instead of reinvesting for growth. With growth investments, you have to sell to receive the income. But you decide when you take the income. A lot of people end up reinvesting dividends. So if you're reinvesting dividends, you're just putting the money back into the investment. With growth stocks, you could take that out or you could sell anytime. Let me give you a couple of examples of dividend versus growth investments. So the S&P 500, that's the teal line, it pays 1.4%. Very low dividend, but it pays something. The S&P 500 is a basket of 500 of America's largest companies in one basket. And that basket pays 1.4%. Coca-Cola, that is the yellow line in this chart, pays 3%. Verizon, the dark blue line that you see has tumbled, pays 7%. Last year, they were paying 5%. Now they're paying 7% because look at their performance. This is what happens sometimes if you look at if you look at a big, what's it called? Big dividend, it could be big because their growth is so bad. So that's what you don't want to get caught, like be thrown off guard by the dividend and let that deceive you, because it could mean that the performance of the company is bad, or they're incentivizing you to keep something that's just total crap. Now, Apple is the orange. Apple pays 0.5%, practically nothing. They look at this growth, right? And if you look at it line by line, so Apple has returned 300% over the last 5 years. So who cares if you get a dividend or not, if your stock has returned 300%? And Apple isn't the only one. Like Amazon, Facebook, Google, like a lot of these like growth companies have done something similar. So, but they don't pay a dividend. So people might say like, oh, well, they don't pay a dividend. Well, they're growing. Like, why not use some of the growth? And that's what I'm about, because I think focusing on growth-oriented investments and nothing crazy, not like cryptocurrency, not like anything that's like unknown, like something that has evidence growth, like everyone around you is using it, you're using the product, you're buying it, like not something that's just skyrocketing because of hype, but something that's skyrocketing because everyone uses their product. So why not benefit from owning them as well? And I like dividends are fine, but the problem with dividends is you need a much larger portfolio to gain substantial income. So with a 5% dividend, which is at the cusp of being high, like anything higher than 5% probably means there's something wrong with the company, like we saw with the Verizon stock. So you need $240,000 to get $1,000 per month from a 5% dividend. So it's great if you got a large portfolio, but if not, then why not use some of the growth from your investments, which is just a matter of selling a little bit to create your own income stream, right? So this is why I like to focus on growth over dividends, because you just have to have a very large portfolio to generate passive income from a dividend strategy. Now, I really appreciate you being here. I just want to remind you that I'm giving you that bonus at the end that's going to show you how to pick investments for your portfolio. So as we get into this, that's probably going to be something that comes up. But let me see if there's any questions before we go into the next phase of this, which is the investing action plan. Okay, Amanda. So for an investment like the S&P 500 that might earn quarterly dividends, are dividends taxed on a yearly basis, even if you don't sell that investment? Yes. So dividends are taxed at the end of the year. any investments you own that pay out a dividend, it's going to be recorded by the investment firm that you hold that investment at. So let's say you're at Fidelity. At the end of the year, they send you a form. I can't remember the name of it, but it's one of the tax forms that'll show you the income that you received. And then that will go into your income tax forms, and that will be taxed at that time. Same with selling. You will pay tax on gains from your portfolio. Went over that slide here, but when you're selling from the growth of your portfolio, you pay tax on the gain, and it's capital gain taxes, which is a lower rate than your traditional income tax, and that's typically for dividends as well. So that's what you could expect to pay, and it's usually about 15% for most people. If you make 40,000-ish or less, it's zero. You don't pay any. If you make between like 40 and 400,000, you pay 15%. So you're not paying income tax rates, you're paying capital gain rates as long as you've owned the investment for more than 1 year. Let me know if you guys have any other questions, but we're going to get into the next phase, which is the investing action plan. So like, how do you actually put your investments together to create this strategy for your income stream? Okay, so now let's get into the action plan. You will need to open a brokerage account, set your budget, and choose your investments. So a brokerage account is the account needed for investments prior to age 60. You have freedom to take money out without penalty at any time. Taxes will be owed on gains. You can also open up a retirement account, whether it's an IRA, a 401k. If you don't have one already, these two work really well together. The retirement account for later, the brokerage account for sooner. So they are both very important to have, because the retirement account, you have tax benefits. You have amazing tax benefits in a Roth IRA. All the gains get to come out income tax free, which is amazing. So if you joined, or when you signed up for this, if you just joined today, you'll probably get this email tomorrow, but I sent out a 4 steps to invest that talks more about the retirement accounts and like more details about investing. So take a look at that as well if you have more questions on those. With setting your budget for investing, the first thing you're going to need to do is review your income and monthly expenses to see how much you can allocate towards investing. Make adjustments to your spending if you'd like to invest more, right? If you're spending all that you're making, there's going to be areas when you look through your money, when you look through your spending, where you're like, it's nonsense. Like, I know it. It's the same for me. Like, we look through our budget and we're like, oh, okay. Yeah, I see that extra whatever money that I spent on something that kind of forgot about or don't really care about. That would be so much more impactful if I redirected it towards investing. So that's more short term, right? We don't want to be pinching pennies forever though. Like, we're trying to live our rich life. We're not trying to live a budget life forever, but the budget life might be important in order to get to the rich life. It all depends on what you're working with and your income. So increasing your income, increasing what you're able to invest will have a massively stronger impact on what you're able to save long term, right? But that could be a longer term strategy. It might take getting into a higher paying position. So these two strategies work good together, increasing your income and decreasing your expenses for the short term. So now, okay, now we get into choosing your investments. So this is where that printout is going to be, or that printout, that guide, right? Maybe you'll print it out, maybe not. I like to follow an 80-20 strategy because I like security. I like to feel comfortable with my investments. So for me, I think of this 80-20 approach, the 80% being the ice cream in an ice cream sundae. If you think of an ice cream sundae, ice cream by itself is amazing. You add in a cherry, some topping, some whipped cream. makes it that much more yummy. So the 20% is those toppings on your sundae. And for your investment portfolio, it could be individual stocks, because individual stocks have the power to return more to you if they do well. If they don't, you have that 80% bucket. You still have your ice cream. You're fine. If the cherry falls on the freaking floor, you're fine. But the idea behind this is only valid if you like the idea of individual stocks. If you don't, keep it at 100% index funds, and you could create a really nice diversified portfolio for yourself. The 20% is an opportunity for concentrated growth. The 80% is more of a diversified approach. You spread it out into more investments. So this gives you options when it comes to taking your income. So let's say your stocks, you have a few stocks and some of them have done really well. You can pull from those, like you can sell some of them. One second. You can sell some from some of those, and that allows you to benefit from that growth. Or you can choose to sell from your index funds, right? It gives you some flexibility. But now you're probably wondering, like, well, how to decide what's in the 80 and what's in the 20? So with the 20%, I like to keep it really simple with like 3 to 6 stocks of companies that you use, everyone else uses, you can see is going to be around for a long time, you don't see going anywhere. Like those are the types of things, because often people will want to get into like something sexy, something that's like new and fresh and hot and like has the, like your friends, whatever told you that it's going to do really well. We have no historical data to back that up. We have no proof. I want proof. Like, show me what people are using and how I'm using, like Amazon, for example. If you bought anything on Prime Day or use Amazon Prime or shop on Amazon, like, why not own Amazon? You're already giving them money. You already see that everyone else is too. Like, why not be an owner of somewhere you're already spending money? So that's how I think about the stocks portion. The index funds, there are hundreds of, if not thousands of stocks. So that roller coaster becomes a much smoother ride because you don't have such wild movements in funds when you have hundreds of them kind of averaging themselves out together in a sense. But I like to use a large cap, a small cap, an international. And if you are a more conservative investor, maybe getting closer to retirement, you would add in some bond funds to take down that risk. So we're going to review, but let me see in the chat if there's any questions.